Is the spring housing market a flop? We're going to talk about the housing market crash. I have with me John Flynn. Go to his channel, check him out. Great content that he's putting out there. I especially like some of the boots on the ground stuff he's done recently. Just fantastic stuff. One of the only truthful realtors in Canada. John, how are you doing, my friend?
Pretty good. Thanks, Luke. I'd hopefully like to think I'm not. I think there's a lot of truthful realtors. They just are scared to share their real opinion for the fear of losing their clients and whatnot. But yeah, a lot of people tell me that also. And maybe the only outspoken, truthful realtor, one of the few anyway. And I agree with that for sure. It's a spring market, right? It started
Mhm.
early this year because the weather was very mild in Ontario, and we
Mhm.
had, tons of activity out there. Now I'm seeing it start to slow already. And if you look at 2021, you look at any chart in 2021, we had a big boom in February and March. Prices increased, and then they were flat and even declined in Ontario, especially going into April and May. So I'm starting to see that same trend. I've been tracking the data from March already, and it looks like we're going to have an end to the spring early this year in the housing market anyway.
Oh, that's really interesting to know because obviously you're seeing so many conflicting headlines. And even I've talked about this where it's like, back in January, they're really trying to pump the spring market's going to come roaring back. Now's the time to buy. And then literally they flip flopped and were like, oh, it's too early to say all clear. So what's happening with sales? Are sales really much higher than last year? Is it the volume is starting to decline already, like you're saying? And what's happening with inventory around Ontario and around the country?
Yeah, so I've actually done a recent chart on the sales, and actually I did all of Canada for the sales. Now, the sales are inversely related to the interest rates. So we're going to see press sales again this year. This is my forecast. Last year we had about 443,000 sales in Canada on MLS. This year we're maybe a little bit more, but we're going to see that correlation or the inverse correlation with the interest rate. And you can look it up on my Twitter there, Luke, and put it on the screen if you want. This is very simple, right? The Bank of Canada rate, the overnight lending rate, compared to the MLS sales, the number of sales, not the prices. And especially since 2021, once those interest rates get really extreme, the correlation is almost perfect. I actually had some scientist, some data scientist or something, ask me about the correlation coefficient. So I actually went and figured it out for him. And in the last 3 years alone, it's a negative 0.91, and zero point 0.1, negative zero point 0.1 is almost a perfect inverse correlation. So in the past few years, we've had almost a perfect correlation between low interest rates, high sales, and now we have high interest rates, or apparently high interest rates, and low
Mm.
sales. So until those interest rates come down significantly, the sales are not going to pick up. And I can overlay immigration on this, and immigration doesn't matter. We've had super
Mhm.
high immigration, as you know, and our sales have been like the lowest, probably the lowest per capita in Canadian history. So like immigration's a lagging thing, right? We may be in trouble in 5 years from now or 10 years from now, but a lot of
And
these
that's if
immigrants
they
might leave.
stay.
Yeah, they might leave. So yeah, the now for prices. Okay, so this is the number of sales. Inventory has been building over the last few years. We're seeing higher highs and higher lows with the inventory. And there's another chart on my Twitter. You can look down through there and find it. And this is a national chart also. And we went through a period of having, lower lows and lower highs, meaning there was less inventory. So yeah, we're seeing higher lows and higher highs, meaning inventory is building. Now, it's hard to see inventory because every month it changes, right? And June is peak inventory, right? So you're going to see a lot higher months of inventory than you will see in January. But it's seasonal. But again, this is why we're looking at those higher lows and higher highs, because it is trending up now over the last few years. Now, when it comes to prices, everybody loves the February hype, right? We get into the new year and this is it. Now you better, and it's the same thing every year. You better buy now because this is your last chance. And this is what happened in 2022. This is what
Mhm.
happened in 2023. And this is what's happening this year. You better buy now because this is the last chance. If you don't get into the market, you're probably never going to be able to get into the market again in Canada. And this is the narrative going around. Well, looking at the charts, the February month over month increase in prices, we see February is the number one month. There hasn't ever been a February on record that prices haven't gone up month over month. And it's the biggest increase
That's
out of all the
interesting.
months. So March is not going to be as big as February, generally speaking. And March sees, it's mixed. We'll see some month over month declines. We'll see some increases. But again, February is the biggest month in Canadian price increases in Canada historically. And there has never, ever been a decline on the records that we have from Korea. Now, they only go back 16 years, but still. So, yeah, don't buy into that hype of the spring market because it's the same routine every year. Then summer comes and sales slow down, and it just repeats the cycle, right? And we've been flat. The honest truth is we've been flat with prices. If you take that blow off top out of February 2022 and March 2022, depending on where you were, take away that blow off top, and we've been flat since 2021, the prices. And we've seen seasonal
Wow.
swings, but otherwise we've been flat. Like Canadian real estate, if you had a bought anytime since 2021, your best case after fees and whatever else is breaking even. And that's your best case scenario. If you're selling, you're probably losing money if you bought in the last 3 years. So it's a pretty negative time for real estate prices in Canada. And we haven't even reached a recession yet. Just think about when the
No.
recession comes, what's going to happen.
Well, yeah, that's true. And you mentioned that prices are flat, and we're talking about nominal prices. Obviously, if somebody bought in 2021 and then they sold in 2024, like what they can buy with that money has probably gone down by 20, 30%. And I know the government's going to say, oh, it's 10, 15%. But the reality is, it doesn't matter what the government's saying, it's what you can actually buy with that money. So you're actually seeing like real inflation adjusted prices really going down then, even if it's just maintaining flat. And a lot of people kind of miss that dynamic, I think, a little bit. And they don't understand that obviously that affects prices as well. Real prices, I think, are even more important than nominal. I'm going to bring up a chart that is really interesting chart on your Twitter, actually. It's the chart with all the different markets across Canada, from buyer's market to overheated seller's market. So on the one end, you've got Calgary, and at the buyer's market end, you've got Interior BC, Okanagan, which is really interesting to me, John, because the Okanagan was like, it was just blowing up in 2021. Like loads of people were buying Airbnbs, investment property. Like that's a market that I've really been tracking and monitoring. And now it's completely flip side of that. So, let's segue into talking about Calgary a little bit. I know you wanted to talk about this. So what is going on in Calgary?
Calgary. So I'm not a local expert, obviously, in Calgary,
No.
right? But even in Ontario, which is a crazy thing, I know what's going on in Calgary, or partially what's going on in Calgary, because I literally get emails from agents trying to sell homes or trying to promote homes for sale in Calgary. And
Wow.
so that whole get rich quick investment scheme or speculative investment scheme from Ontario has moved to other places. And probably the number one place would be Calgary. And I'm sure people from BC have moved into speculating in Calgary. And of course, I just posted on my Twitter again just a few days ago because I thought it was hilarious because it's the same propaganda. They're not trying to sell homes. These are not end users buying these homes in Calgary and driving the market insane. Yeah, there's a lot of people moving there because of the price points, I'm sure. But
Hmm.
they're targeting investors and speculators and looking at I got this ad here from some realtor, and all they're doing is promoting, like, it just lies on here. Like, people pointed this out. I didn't actually scrutinize it too much, but of course they're
Hmm.
saying cash flow positive rents will easily cover your carrying costs. The number one thing, and I don't know if you can put this on the screen or not, but it's it's just hilarious. It says invest in Canada's next big housing market, Calgary. So it's like the next Ponzi, part of the Ponzi. They need to like filter that money or get more buyers into this scheme by going to Calgary now, because in Ontario it just doesn't make sense. Like, if you buy a house in Ontario, especially a pre-construction home, you're going to be
Hmm.
losing anywhere from like, and it's not small amounts of money. You're going to be losing $1,000 to like $3,000 a month on cash flow just from buying a house or a condo. I have people contact me, that watch my channel, and they ask me for advice, and I feel bad for them because they were led into this by dishonest realtors just pumping the market, saying prices will never go down, and they're like, they have these condos in Toronto and they're spending, $6,000 a month. Like, this is not an exaggeration.
Wow.
$6,000 a month to carry these places. The mortgages are over $800,000 plus the fees, and they're collecting like $3,000. Like, it's insane. And they're hoping to wait the market out so that the condos go back up. And I don't study in detail into condos because we don't have a lot in Niagara, so it really doesn't affect me. But I do listen to the rhetoric, and I actually had agents calling me this week, desperately trying to sell me this condo or get me to sell this condo, and offering a $10,000 bonus in Grimsby to sell this condo. And I watch what's his name, Rob Mersaglio. He does a bunch of stuff in Toronto and Durham and stuff. And yeah, he's saying like the condo market's in trouble. And we've seen the
Hmm.
condo market in trouble before. Like every time there's a real estate crisis or downturn, the condo market just gets obliterated. And it's happening now. That's what's happening with the condo market. And yeah, it just doesn't make sense, right?
This video was powered by ExpressVPN, helping you get around the censorship laws in Canada. Go to expressvpn.com/market mania if you're interested in a VPN. Yeah, and I think that I just think that condos in general are just terrible when you think about it. If it's a long-term investment anyway, because I mean the value of maintenance for a building is only going to go up. These condo fees are starting at eye-watering amounts, and then you've only got to think as well. When I look at real estate or property, the most of the value is actually in the land. The actual house is a depreciating asset because you have to maintain it, property taxes. It's basically a liability, but the land is what's meant to increase in value. And with a condo, you don't own any land. Like you own a little box in the sky.
Even if you bought, to me, I would never buy a condo unless I didn't live in the country and I had to like leave and just come back, or I only lived here part time. Then,
Right.
I
Yeah.
can't take care of the grass, and it's just easier. But condos to me are liabilities. Even if you pay for them free and clear, they're liabilities because you don't know what's going to happen with that corporation. Are they going to increase the
No.
fees? Are there going to be special assessments? Like, you're at the mercy of the condo board and the structure of the maintenance as a whole. So,
Yeah.
and yeah, the condo fees have like skyrocketed, whether it's Ontario, or I don't know how it is in Calgary, but I'm sure it's the same in
Yeah.
Florida,
It's the
whether it's
same.
insurance reasons. Like, it's just skyrocketed everywhere. You're paying, like, you might as well just round it off to $1,000 a month at this point for
Yeah.
condo fees, which is absurd. It's totally absurd. So yeah, they're going to get hit the hardest because of that financial liability, in my opinion. So
Yeah, I think that the condos are just not a good thing, and I can tell you a little story. Like there was one building that was in South Calgary, and basically the developer that built that building went bankrupt like a couple of years after they built it, and then they had no recourse to basically go back to them because they had a lot of building issues, structural issues with the building. So what happened is they had to put that into the condo fee and pass it on to the people who own there, and it ended up their condo fees absolutely skyrocketed. Like you were paying like $2,000 a month in condo fees on a 2-bedroom, and what happened to the real estate values was they were 50% less than everywhere else because everyone was taking into account like the condo fee. Yeah, it was really, really interesting anyway. So that's always a risk. And especially when you're actually seeing more and more developers go bankrupt in Canada. So that's actually a big risk.
yeah, no, it's a good point. And I've seen, like, over the years, I've seen myself, and I've heard stories even prior to paying attention to condos where, stucco would fall off the building and everyone gets hit with a special assessment. And then the developer just claims bankruptcy and they're left to pay it. And everyone
Mm.
has to pay like 20, 25 grand. Or the one, I'm going to do another field trip next week. But I'll tell you now, like, there's one in my region that collapsed. They were building it and it collapsed, and it was like a big deal. So of course, the media is circling around this, and then it collapses again for the second time, like while it's already collapsed the first time. And then they own another
Jeez.
building that they're getting sued on, and this place is years old, and the pool has never been put into service, and all these amenities aren't even in service yet. And these people have lived in these for years. And of course, this building was purchased by speculators and investors, and
Hmm.
so this is, yeah, the quality And especially when the quality goes downhill on a condo, it's like such huge costs to rectify it. It's insane. So yeah, it's be very careful in which condo building you buy into if you do elect to buy into one is my advice.
Yeah, for sure. That is good advice. And I'm just pulling up on the screen right now. It's basically just all the Calgary rentals, and I'm just looking at single family homes right now. And this blew my mind because I hadn't looked at this in a while. I looked to see how many rentals there were of single family homes, and it has just exploded. So it's not just condos, townhomes, duplexes, which people are buying. It's a lot of houses, and the inventory for rentals in Calgary has exploded as well. Like I'm looking right now, there's over 4,000 units for rent in Calgary. That's single family homes, duplexes. And this is just on this one website. There might be, I mean, this is the most popular. But even if you like zoom in on an area or a neighborhood, there's just literally every street, John. So when you look at the real estate market and you look at how hot it is, and then you look at all these rentals coming online, it kind of, you put two and two together, you connect the dots and realize there's a lot of speculation going on.
Oh yeah, so now it's in Toronto. It's funny because they list most of them on Realtor.ca, so you can literally go to like Realtor.ca in Toronto and just like click for sale and then see how many listings. I'm gonna do it right now actually, and it's insane. I just did it in Calgary, and you had like 2 listings for lease on Realtor.ca. So like Realtor.ca is not like a big source to lease them there. But I just want to look in Toronto real quick here. So yeah, if you like just leave Toronto and you can see the surrounding areas, there's what 12,746 listings for rent, and then
Wow.
for sale there's 13,510. So like there's almost as many listings. There's pretty much an equal number of listings for sale as there is for rent in Toronto right now, which is insane.
Wow.
Like, and I did the data on this. Like I pulled the MLS data, and last time I did it, I think it was 2023 for the whole year. Realtors are now leasing more places than they're selling in Toronto, which has never been the case, right? So
Wow.
the speculative purchasing, they all have to rent them out, and they think they're going to hold on to them, and they're all going to shoot up in value. So they're $2 million or something every. Well, in Toronto, the houses would be $2 million. I guess $5 million every house is going to be worth now.
Yeah.
Which could be the case if they keep printing money, but not. We're going to see a crash or a recession first, and that's another thing people don't understand. They think, yeah, they're right. If the government, they'll come in and start bailing people out again and bailing the banks out, and just like they did with GM and all the big automakers back in 2008 or whenever they crashed. They're gonna, do that at some point, but not until after a big crash, right? They're not going to do it before a big crash. People think they are,
No.
but it's not going to happen. We're going to go through the cycle. People are going to lose their shirts, and then they're going to start the stimulus again. And yeah, at that point, it probably is a good point or a good time to buy, maybe in
Yeah.
3 to 5 years from now. But yeah, buying now is just insane because we're like still at the top of the bubble.
Yeah, yeah. Well, I think people get it generally wrong as well when it comes to the debasement of the money because they think that, oh, this just expands, like it can only expand. But when the majority of the money supply that's created is credit, well, it can actually go down. We saw that last year in the United States or the year before. I can't remember where the money supply actually started to go down. Even in Canada, it really started to flatten out. So it can really happen, especially where you have a credit event, because people are just so leveraged. Like in a cash environment, I would agree with people that when they debase the currency, that's going to have a massive effect and drive up prices. But when you're leveraging, it's totally different. It's almost like when you get margin calls and you're trading like securities or whatever. Like it's the
Mm-hmm.
same thing when you're obviously using leverage to buy a house. If that house goes against you too much and then you come to renew, you're essentially at a margin call if you can't add the capital to that. And I think I read something like just over 10% of mortgages are underwater right now. You might have better data on that than me.
So the mortgage, yeah, I do track the mortgage arrears. It's still historically very low, but
Yeah.
when you're talking about negative amortizations, yeah, it's like a huge number. They don't even release it anymore, but there was like 30% at certain banks were negatively amortized. Like, so who knows? They've been hiding the information. And the problem now, if you look at the mortgage arrears data, back prior, the last cycle, it was more accurate because there wasn't that many alternative lenders and B lenders and private lending, companies that did it.
Hmm.
Nowadays, like when I look at the defaults or the power of sales on the MLS, the majority are from private and like unknown non-bank lending companies. So we're seeing this, like we can't really track the real numbers of mortgage arrears and defaults. And we can do it two different ways. We can look at mortgage arrears, but again, it's like 10 banks or something in Canada, and or
Hmm.
maybe 12. And you have like National Bank and Manulife Bank and stuff, and of course the big five. But then when you get into the actual number of power of sales, you have to kind of weekly track it or monthly track it on MLS, and literally go through the owners' names or who's holding the forcing the power of sale, I should say. And again, most of them are still like the B lenders or the private lenders. So it's hard to track, right? It's very hard to track this information. But yeah, there's tons of people that are underwater, and it's just it's a ticking time bomb, and we're going to see it's going to unfold, and it is unfolding right now. It's
Yeah.
I see it, I hear about it every day. I get calls looking for advice, and I'm not a financial advisor. I don't know why they call me, but I guess they just want to know if they should sell it or hang on to the house, and it's a tough decision. The calls I get
Yeah.
are literally, do I keep renting this house at a loss, or do I hang on to it at a loss and hope that it goes back up? And I can't even give them the answer, because I said, like, you're going to have to hang on to this thing for years. If you can hang on to it for years, then maybe you do hang on to it. But it's tough to advise people in these situations. They're kind of just like, how do you cut your losses the easiest way, or to reduce your losses? And that's what people don't realize. These small so-called investors and speculators, they don't understand the concept of when and how to cut your losses. You're just holding on, and this is the worst thing you could do, is hold on, because again, it's been 3 years and they haven't gone up, these prices, and they're not going to go up now with the way the economy is going, and of course the way that all the rest of these indicators are going, with whether it's unemployment going to creep up and interest rates are going to get cut. And it's going to be opposite when interest rates get cut up, most people think, right? And again,
Yes.
it doesn't make sense. Like, I don't even know if we talked about this before, but let's say interest rates get cut, right? So the theory is out there with the lay people and the market pumpers, that interest rates are going to get cut and prices are going to go up again because now it's cheaper. Well, first of all, people can't afford the homes right now. So if you
Hmm.
cut the interest rates, which makes lending cheaper, your debt cheaper, and then the house prices go up, you're still paying the same amount. So how does
Yeah.
that help? Like, it's just insane, like the theories I hear. But I guess whatever, this is what they believe. But we know, and from the charts that I put together, when interest rates start getting cut, prices go down with them, and
Yeah.
people cannot comprehend why that happens. And of course, it happens because we're in trouble, and then there's a lag time for those low interest rates to work. And again, we'll just keep repeating this cycle until I guess the dollar's worthless. I don't know. I think that's the end game, right? Central
Yeah.
bank digital currency, reset everything.
Yes, yeah, yeah. Basically, more surveillance on everything from the state. And that's happening when it comes to YouTube or whatever it is. That is the end of part one. Part two will be released shortly. If you've enjoyed this video, please support the channel either on Patreon or by going to expressvpn.com/market mania and getting yourself a VPN to get around Bill C-11 and all the censorship laws in Canada. If you've enjoyed this video, you might like this video here. Thank you so much for watching, and I will see you in the next one. Take care.